evening, everybody. This is Johnny Seville. This is your executive summary for stock setups for the 30th of September. So let's have a look. The S&P 500 had a nice breakdown today. We're still kind of oscillating back and forth in this channel, so we will see what tomorrow brings. Last day of September, of course, means the end of open range. Open range has worked well this month so far. It actually worked, as you can see, the upward open range was broken. Open range was set on September 15th. We broke higher. We've stayed higher. The bullish trades have been fantastic. So now we're starting to break down. We'll get a new reset of open range. If we break higher, that's going to mean the bump and run continues. If we break lower, we'll start to see some turbulence in the market. But things will probably still continue to be oscillating back and forth, I'd imagine, until the election is over in November. Now, let's have a look at the key notable mentions. So, okay, I guess for the first, I'd like to start off with the potential new plays. These are the favorite. We've got a lot of longs, so I wanted to focus on the shorts tonight. Now, in order to do that, I've got, for those of you who can't short, I picked out an inverse ETF for you to take a look at. Now, this is the ultra short on Brazil. And as you can see, we're consolidating tightly at the moment, very tight. And and there you go. You can see it's bouncing along that support, that long-term support, all the way back to September, 2010. We are at that support level now. Look at the way it's rallied before, or usually back basically from about 20 area up to 30, 36. So there's like a 50% plus return potential on the ultra short on Brazil. So the Olympics are over, and maybe it's time for the ultra short to get gold. I'm sorry, I'm being a little corny, aren't I? Anyway, for BZQ, let's go into look at the hourly chart, and I think that this is a potential entry right here, where we're at currently. You can see we're just forming a potential flag. That's what I'm looking at. As you can see, it's broken down out of this kind of fallen angel type bump and run formation here. We've rallied up. We've pulled back, we've respected support, and we're flagging. So I'd look for a break of $20.53. My stop loss would be at $19.41, and I would just let that run, and I would just let update the stop as it hopefully goes up. So there's a way to short Brazil. Now, if obviously, we've got some big problems going on with Credit Suisse, so I thought another way to diversify is to, again, go outside the country and look at shorting Europe's financial system. So we look at it at EUFN, the iShares European Financials. You can see this is breaking down out of an upward channel. This one I like as a short below 1671. I'd look at a stop of 1777, and my first target would be down there at 1470. So we've got now that would be the first stop, but again, that would be a momentum trade that I would just continue lowering the stop and let it run. Third favorite. Boing! Jack in the box. Now, I have to say, I'm driving around California at the moment, and I had a delicious In-N-Out burger today. My girlfriend's first In-N-Out burger was a great experience. We did drive past a couple of Jack in the Boxes on the way, and I thought, why would I'd never stop there. I'm not sure what Jack in the Box, how that goes with many American favorites, but it's certainly not a real popular one that I'm aware of. But the stock has had a great climb, but seems to be breaking down significantly. Now, have a look at the money flow, though, on this one. There it is, the Twigs money flow. Big divergence, shocking divergence. Now, if we're going to have a look at the insider selling, bam, huge insider selling from several different directors and officers of the company, unheard of in the last 12 months, and in the restaurant industry, which has been a bit of a slog recently. So obviously this is would be much more susceptible, I would think, than things like McDonald's and so forth, and it is just breaking down right now. I would look at that as a longer-term option play, looking at the March $95 puts, which are bid is 710, ask is 790. And again, I would look at a stop criteria just above the high of this candle, which would be 102.51. So I'd look at 102.63. Basically, the first target. Look at the history of the company. You can see it's got a decent way that it could go down to this February lows, and that's what I would be looking at as a momentum play for a longer term potential. last but not least, COO. Again, breaking down from some pretty fantastic highs, and it's a double top. So double whammy. This could get this kind of double top has the potential of really getting some significant momentum to the downside. Money flow catastrophic. I'd be looking at this as a nice short around these areas. Let's look for a break of one side, like 174.73. I'd be looking at really downward momentum. And again, I would be looking at, and I put a stop loss at 187. The insider target, again, this could be a really nice drop. If we look at the Fibonacci retracements, I'd be looking at the 61.8% Fibonacci, which is going to come in at 147. So look at the 148.13 target. But again, we just adjust the stop loss to protect that on the way down. And if we look at the insiders on this one, again, you'll see some significant insider selling coming in there as well. So that looks pretty good. So those are my four favorites: BZQ, EUFN, Jack, and COO. All right, so now moving on from there, let's have a quick look at some of the notable mentions. I want to mention AGN. I mentioned it in Trading Room already, but this one, of course, doing really, really well. We mentioned these were the 240 December puts, was how we play that, or the February 220 puts. Now, the December puts are up from $13.10 to $17 by $17.60, and the 220 puts, which were $8.60, are now up to $12.50. So pretty damn awesome performance so far. Pretty cool. About 40-50% kind of returns already in just a very short period of time. Lululemon, for those of you still holding those puts, is doing amazingly well. Those were the October $75 puts we alerted you to before the earnings drop. That's there. Those are down up from $3.64 to $13.64. So what's that? A 400% return. Marriott, which I'm holding, those puts are moving really, really well. They're up from $1.50 to, let's have a quick look. No. Have a quick look at Marriott. Sorry. Yeah, those the October 67.50 puts are up to $1.55 from 140 is where I bought those, and the January 65s are up to 265, and I bought those for 255. So they haven't taken off too far yet. It looks good. Okay. Now, what else? SPG is still looking good. I just want to wait for this to break down below this support line. You can see it 203, and then we should get some action out of that. Costco reported aftermarket today. But, aftermarket trading was only up 1.5% despite good earnings. So this has been just a kingpin trade. If you were in this, this has just been going and going and going. The options are up awesome. It's broken down. The candles are expanding. The volume is going up. The money flow is going down. It's awesome. I love this one. And as I said in Trading Room, Costco's on sale today. So there you go. I hope you're making some money on that one. And also TJX. Also doing really well. TJX is just continuing to drop further and further down. That's the original bear flag play from back in August. Continuing to kick butt, now breaking through support. So that one's should likely hit its target here in the next few days. On the long side, wow. I mean, the shorts are dropping and the longs are rallying. It just doesn't get better than that. SCAI, awesome run today. Now, because of the money flow that just keeps on climbing, I would be tempted not to buy. I mean, there is that head and shoulders potential there. But, I mean, if you look at it, it could quite likely really just be a a downward channel. It may be a failed Head and Shoulders and going into a downward channel. I think that's quite possible given the strength of the money flow and the close on today's candle. So I think that we would just simply raise the stop loss here to, as you can see, to 45.63 and just let it keep going. Okay, DRNA had an amazing rally and hit its target of $5.03. Beautiful breakout trade from just a couple of weeks, over 20% profit there. EFOI, also amazing move today and yesterday, up from its entry around $4, hit a high of $5.40, a crazy jump in that. And again, these are all fallen angels, folks. That's why I love the strategy so much. EFOI, I would raise the stop on to 463. I mentioned that last night in the written summary that it looked like it was going to flag. And there you go. Bang. Flag. Awesome. I look at raising the stop to 463. That locks in about close to 20% profit if it does pull back to that. And no one can argue with the profit. ITG also looking really good. This was from this. Now, some of you weren't sure when we alerted this. This was from the executive summary back on September 8th. Looking for a breakout. It broke out, and I would raise the stop criteria on to 16.17 to protect the position there. So there you have it. That is the last summary for the week. I'm really excited to have a lot of the new clients on board, and I hope that this is a great start for your trading career with us. If you are someone just on our trial membership or just watching this one of our free preview videos, highly recommend you give us a try. It's only $9. If you had taken almost any of our trades this week, you probably would have paid for a year subscription just in the trades we've been alerting over the last week alone. So I would give it a go. $9 for a full month of these alerts to give us a try. Full details are at acornwealthcorp.com/gold. And to all of our existing members, well, I look forward to starting another month of success with you in October. Have a great night and a wonderful weekend. Take care and happy trading.